Ever sat staring at a stock chart for so long that by the time you finally decided to buy, the move was already over? That's not bad luck. That's paralysis by analysis. Overthinking setups until the opportunity disappears. In this episode, we'll dig into why traders freeze, what it costs, and how you can stop missing trades before they pass you by. Trading isn't just about finding the right chart pattern or reading the perfect technical indicator. If it were, everyone with a TradingView account would be rich. The truth is, most traders don't fail because they can't identify setups. They fail because when it's time to pull the trigger, they hesitate. They second-guess themselves. They zoom into the 1-minute chart, zoom out to the daily, add 5 more indicators, and then search Twitter for confirmation. And before they know it, the setup they were obsessing over is gone. This is called paralysis by analysis. It's one of the most common psychological traps in trading, especially for beginners and intermediate traders. It feels safe to keep looking for just one more reason to enter or exit. But safety in analysis can turn into sabotage in execution. Think about it. The market rewards decisiveness. You don't need to be perfect. You just need to act on a well-thought-out plan consistently. Yet many traders miss opportunities not because the market beat them, but because their own brain talked them out of acting. In this episode, we're going to break it down. We'll explore what paralysis by analysis looks like in real trading situations, why our brains are wired to overthink, and how you can train yourself to stop hesitating. We'll look at real-world examples with big names like Apple, Tesla, and Nvidia, and translate those moments into lessons you can apply the next time you're staring at a chart. By the end, you'll not only understand paralysis by analysis, you'll know exactly how to keep it from stealing your trades. Before we continue, I want to thank the sponsor of today's video, Noesis. Noesis is a platform built specifically for traders who want to level up their consistency and mindset while avoiding mental pitfalls. It gives you tools like a daily mental check-in, a trade journal, and an emotion wheel to track your state while trading. On top of that, it includes structured playbooks, which are strategy checklists that you can go through before and after each trade, plus a playbook marketplace where you can explore proven strategies from other traders or share your own. If you're serious about developing the psychological edge that most traders ignore, Noesis is worth checking out. You can get started today at noesis.zone, link in the description. What paralysis by analysis looks like in real trading. Imagine Apple. AAPL has just reported strong earnings. Revenue beats estimates, iPhone sales are up, and guidance is solid. The stock gaps up in pre-market and hovers around a breakout level. You've done your homework. You know this is a bullish setup. But instead of buying the breakout at $180, you start digging deeper. Maybe I should check the RSI. Oh wait, what about the MACD crossover? Let me also pull up the weekly chart. And hold on, there's that analyst on YouTube who said Apple might dip first. While you're checking every possible variable, Apple rips to $187. By the time you finally feel ready, the risk to reward doesn't look good anymore. You pass, and then spend the rest of the day watching the stock climb another 5%. That's paralysis by analysis. The opportunity didn't vanish because the market was unfair. It vanished because you kept waiting for certainty, a certainty that doesn't exist in trading. This overthinking shows up in different forms. Waiting for all indicators to align, switching time frames endlessly, looking for confirmation on social media, analyzing until risk feels completely gone. But here's the catch. In markets, risk never disappears. There will always be uncertainty. Why traders overthink? So why do traders fall into this trap? A few big psychological reasons. Fear of loss. Our brains are wired to avoid pain. In trading, that pain is losing money. Overanalyzing feels like protection. If I just look at one more chart, I won't make a mistake. But ironically, the overthinking itself becomes the mistake. Illusion of control. The more data you analyze, the more you feel in control. Checking 5 indicators instead of 2 feels like progress, but in reality, you're just delaying action. Perfectionism. Traders often want the perfect entry, but perfect doesn't exist. Even pros take losses. Overanalysis is perfectionism in disguise. It's trying to engineer certainty in an uncertain game. Information overload. Today, traders have endless data, news alerts, Twitter posts, AI-generated predictions. More data feels helpful, but it often clogs decision-making instead of clarifying it. Anchoring to the past. If your last trade was a loser, you'll hesitate on the next one, analyzing twice as hard to avoid another failure. The past anchors your current decision. The cost of hesitation. Let's talk numbers. Suppose you spot a clean setup in Nvidia, NVDA, at $400. Your plan? Enter at $400, stop at $385, target $430. That's a 1-to-2 risk-to-reward ratio. Solid trade. But you hesitate. You wait for confirmation. By the time you buy at $415, your stop loss is still $385, but now your risk to reward is 1 to 0.6. You're risking $30 for a potential $15 gain. That's bad math. Or worse, you don't enter at all. You watch NVDA hit $430 without you. And then, out of frustration, you FOMO into the next random setup that doesn't even fit your strategy. Paralysis leads to missed opportunities, and missed opportunities often lead to revenge trading. The cost isn't just financial, it's emotional. Overthinking drains your mental energy. Instead of trading with clarity, you're constantly second-guessing yourself, which leads to burnout. How to fix paralysis by analysis. So how do you stop overthinking? Let's get practical. 1. Create a trading checklist. Before the market opens, decide your criteria. Example: I'll buy if the stock breaks above resistance with above average volume. Stick to that checklist. If the setup matches, execute. Don't add 10 more conditions mid-trade. You can test Noesis's playbooks, the sponsor of the video, and create your own strategy to follow. 2. Limit your indicators. Pick 2 to 3 indicators you trust. Maybe moving averages, volume, and RSI. That's it. More indicators don't mean more accuracy, they mean more confusion. 3. Define risk. Beforehand. Set your stop loss and position size before you enter. Knowing exactly how much you can lose reduces fear. 4. Time box. Your decisions. Give yourself a time limit. If Apple breaks $180 within the first 15 minutes of market open, I'll enter. If it doesn't, move on. No endless waiting. 5. Journal. Every trade record. Not just your entries and exits, but also your thought process. Over time, you'll notice patterns in when you hesitate. Awareness is the first step to fixing it. 6. Accept imperfection. This is huge. Losses are part of the game. If you wait for certainty, you'll wait forever. The goal isn't perfection, it's consistency. A different way to think about it. Here's a mindset shift. Instead of asking, "Is this trade guaranteed to work?" ask, "Does this trade fit my plan?" Think of trading like baseball. Even the best hitters strike out most of the time, but they swing at pitches that fit their zone. They don't wait for the perfect pitch that may never come. As a trader, your job is the same. Swing at setups that fit your strategy, not every single possible chart pattern. The more you act decisively on your plan, the less you'll get trapped in analysis paralysis. Paralysis by analysis is the silent killer of good trades. It feels like safety, but it's really fear in disguise. Overthinking setups cost you opportunities, ruins risk to reward, and drains your energy. The cure is structure, a clear plan, a checklist, limited indicators, and the courage to act. Remember, no trade is ever certain, but decisive execution on a solid plan beats endless hesitation every time. The next time you catch yourself checking one more chart or scrolling Twitter for confirmation, pause and ask, "Am I analyzing or am I stalling?" That question alone can break the cycle. Thanks for watching this episode of No Markets, Trading Psychology Pitfalls. If you've ever missed a trade because you overthought it, drop a comment. I guarantee you're not alone. Hit like if this helped you and subscribe so you don't miss future episodes. Next time, we'll tackle another mental trap, the gambler's fallacy. Why traders believe they're due for a win after a losing streak. That one's eye-opening. Until then, trade smart, act with clarity, and remember, Hesitation is the most expensive trade you'll never take.